Shiba Inu and Dogecoin are November's most searched cryptocurrencies on Google USA. Although Bitcoin is the most valuable cryptocurrency in terms of market capitalization, Americans are more interested in Dogecoin and Shiba Inu. Whoever believes meme cryptocurrencies are worthless at this point may want to reconsider. According to a recent study, people in much of the United States are more interested in puppy-themed meme coins like Dogecoin or Shiba Inu than they are in large-scale serious projects claiming to be a financial revolution. While Bitcoin and Ether account for more than 60% of the total market capitalization of all cryptocurrencies, Dogecoin and Shiba Inu won the hearts of Americans in 2021, trending in 30 of the 50 United States. Dogecoin takes over nearly half of the United States. According to Business Insider's coverage of a study by research firm The Advisor Coach, an average of 7 million searches for content about Dogecoin occurred last month. This level of interest is significantly higher than the averages for Bitcoin and Ethereum combined. According to Business Insider, such an increase could be attributed to the influence of the Dogefather. The increase in interest can be attributed in part to Elon Musk's announcement earlier this year that Tesla would accept Dogecoin as payment. And, while the popular financial publication The Motley Fool describes Dogecoin as a hype token with virtually no real-world utility, it appears that things could change in the near future, thanks to a series of capital investments and Elon Musk's interest in adapting Doge's code to global usability standards. In 23 American states, including Florida, Hawaii, New Jersey, and Arizona, Dogecoin is the most widely used cryptocurrency. Indeed, the United States leads the world in overall Dogecoin searches, scoring 97 out of 100 on Google Trends, second only to Turkey, a country with a fraction of the population. Shiba Inu aspirations to be alpha dog. Shiba Inu follows closely behind. Dogecoin's offshoot already dominates search results in California, the nation's technology capital, Washington, Nevada, Wyoming, Texas, North Carolina, and New York. By way of comparison, Bitcoin is the dominant currency in 10 states, while Ethereum is the dominant currency in 8. Cardano is a favorite in Colorado. During the coronavirus pandemic, the market for meme cryptocurrencies developed as a sort of social phenomenon. Despite the fact that Dogecoin, Shiba Inu, Flocky Inu, and others lack significant fundamentals, they benefited from several social media pumping campaigns. However, Dogecoin and Shiba Inu have grown to become part of the top 10 cryptocurrencies by market capitalization. Dogecoin is currently ranked 10th, while Shiba Inu is ranked 12th. And, given that the primary component of money, its value and acceptance, is purely subjective, perhaps it is time to reconsider our perspectives and give meme coins a chance. The Fear and Greed Index in cryptocurrency has returned to neutral at 49, no market crash? With Bitcoin's recent price decline, there have been conflicting views on whether the cryptocurrency is bullish or bearish. At the moment, the Bitcoin Fear and Greed Index indicates that the coin has reverted to neutrality at 49. Could the market crash forecasts be a hoax? Concerns about a market crash. Robert Kiyosaki, author of Rich Dad Poor Dad, expressed one of the most popular views on a market crash, predicting that the price of gold and the stock market would crash in October. Although there hasn't been a significant drop on the scale of a market crash, the price of Bitcoin has dropped from $69,000 to $55,000 in just a few days. However, when the term market crash is defined, there has been a significant drop in the price of Bitcoin. According to Investopedia, A market crash is a sharp and, most often, unanticipated decline in the value of an asset. However, there is no specific quantitative method for determining whether a market crash occurred or not. Support for Bitcoin begins at $53,000. According to an article by Cointelegraph, Peter Brandt, a veteran trader best known for correctly forecasting the 2018 crash, stated in October that the price action of Bitcoin could either become bullish or morph into a larger congestion. Bitcoin's price soared above $69,500 in November, setting a new all-time high. During Bitcoin's bearish price movement following its new all-time high, CoinDesk noted that the next support level may be at $53,000. The coin fell to $55,000 but failed to reach the $53,000 price point. Prediction of the Bitcoin price. If Bitcoin exceeded $53,000, it would have breached its support, potentially pushing the cryptocurrency lower. As of this press, the BTC/USDT pair on Binance shows Bitcoin trading in the mid-$59,000 range, with the RSI reading around 44 over a 24-hour period. Bitcoin's next hurdle to overcome in order to reclaim its bullish state is $60,000, which is not far from its current price. According to a tweet by @BitcoinFear on Twitter, the coin's status on the Bitcoin Fear and Greed Index is now 49. Tesla and China's influence on cryptocurrency. Bitcoin recently fell to 34 on the Bitcoin Fear and Greed Index before climbing to 43 and now 49. The currency is now officially in a state of neutrality, positioned squarely between fear and greed. According to National World, a summer crash occurred as a result of Tesla's decision to discontinue accepting Bitcoin payments 3 months after the company purchased a massive $1.5 billion worth of the cryptocurrency. Additionally, the publication noted China's move to tighten its grip on cryptocurrency use in the country by prohibiting crypto mining and prohibiting banks and financial institutions from catering to cryptocurrency users. Polygon proposes UNI integration, stating that it is prepared to allocate considerable capital. Cryptocurrency transactions are at an all-time high due to rising adoption and a surge in DeFi activity. As a result, the most popular network, Ethereum, has become congested inadvertently. This has resulted in the rise of Layer 2 scalability solutions such as Polygon, which provide faster and more affordable transactions. Naturally, cryptocurrency exchanges are integrating these protocols as a result of increased user demand and personal growth. While this includes prominent decentralized exchanges, DEXs, like SushiSwap and Aave, Uniswap has yet to integrate Polygon into its network. The team behind the L2 solution has now submitted a proposal to the Uniswap Governance Forum for the purpose of deploying the Uniswap protocol on Polygon. Scalability solutions reduce the load on Ethereum's mainnet, making transactions more affordable and faster. According to the proposal, Polygon's protocol currently has a value of around $4.77 billion, making it the second strongest DeFi ecosystem, right behind Ethereum L1. Polygon's rapid growth over the last year has resulted in partnerships with top Ethereum L1s such as Aave, Curve, and SushiSwap, as well as numerous smaller DeFi projects, according to the proposal. Additionally, it stated that Polygon's DeFi ecosystem is self-sustaining, as the company recently discontinued all liquidity mining incentives. Despite this, we continue to see capital and user inflows, as well as extremely high user retention, the company added. Additionally, the proposal detailed the benefits that Uniswap could derive from this deployment, including user growth comparable to that of Aave, which reached 700,000 active users on Polygon POS. Additionally, it noted that lowering the fee would encourage more users to interact with the network, which would result in increased user activity. To entice the DEX even more, the Polygon team has proposed incentivizing Uniswap adoption on Polygon, as the ecosystem would feel incomplete without DeFi's flagship project, it stated in detail. We could consider allocating a sizable portion of our treasury capital to encourage liquidity. Second, we can use a variety of non-monetary activities to aid in the growth of Uniswap on Polygon. This includes involvement in the design and implementation of liquidity mining campaigns, as well as the promotion of Uniswap v3 as a money Lego. A similar proposal was previously made by members of the Uniswap community and garnered widespread support. In addition to the DEXs mentioned previously, centralized exchanges are integrating Ethereum scalability solutions. Only yesterday, Crypto.com announced that its users can now deposit and withdraw ETH via Polygon. Banks charge employees with monitoring cryptocurrency trading accounts. Commercial banks in the country have instructed their employees to begin monitoring accounts suspected of being used for cryptocurrency trading. This was done in accordance with the Central Bank of Nigeria's (CBN) directive regarding this development. The CBN took action against cryptocurrency trading in the country earlier this year, instructing banks to close the accounts of individuals engaged in cryptocurrency transactions. It then frozen the accounts of a number of individuals and businesses that it claimed were in violation of the directive. According to an internal memo obtained by leadership, staff at one of the country's commercial banks were directed to begin monitoring accounts with high-volume transactions or those suspected of being used for cryptocurrency trading. According to the memo obtained by leadership, we wish to reiterate that the CBN is closely monitoring non-compliance with the directive on the closure of all cryptocurrency-related accounts for the purpose of imposing severe regulatory sanctions. In light of the foregoing, all staff members are hereby advised to identify entities transacting in or operating cryptocurrency exchanges within their systems and to immediately close such accounts. Any member of staff who willfully fails to disclose a cryptocurrency account in order to close it will be sanctioned in accordance with the bank's sanctions grid. All bank employees are expected to participate in monitoring accounts, transactions, and customers in order to keep the bank safe and secure from criminals, organized gangs, money launderers, and financiers of terrorism. Accounts with a high volume of daily transactions without a regulatory payment license, as well as those with virtual or cryptocurrency in their memorandum of association, would be flagged. Additionally, personal accounts used for business purposes, accounts with a high volume of daily inflow and outflow, and small businesses with daily transactions that exceed what is normal. Accounts that receive significant inflows from a variety of payees and also make multiple outflows to a variety of beneficiaries should also be flagged. According to one analyst, Bitcoin will soon account for 5 to 7% of the global economy. Since its inception, the crypto king has seen a plethora of changes. Numerous comparisons, falsehoods, regulatory pressure, and so forth. All of these factors could result in either a surge or a decline in Bitcoin and its price. Bitcoin, a digital currency. In a CNBC interview, MicroStrategy CEO Michael Saylor advanced his narrative. He discusses various aspects of BTC. According to him, regardless of the opposing party, the flagship token is the winner. At the time of publication, MicroStrategy, a software company, was the largest Bitcoin hodler. It currently holds over 114k BTC, or approximately 54% of the total BTC supply. That is not the case. We are going to continue stacking indefinitely, Saylor added. Following that, he discusses the rivalry between digital gold and physical gold. He stated as follows. It is fairly obvious that Bitcoin is winning and gold is losing. And it will continue. It's pretty clear that digital gold will supplant physical gold in the next decade. Saylor has previously echoed the same narrative. Bitcoin has supplanted, is supplanting, or is in the process of supplanting gold as the primary store of value for the majority of investors. As things stand, the debate looks as follows. The majority of investors, including well-known gold bugs, painted a bullish picture of digital gold. It has a long way to go, however, before it can dethrone the precious metal. However, benefits such as ease of transfer and low storage costs keep BTC on track. Regardless, when asked about the future of the largest token, Saylor expressed the following. By the end of the decade, it will have flipped gold, monetary indexes, a small amount of bonds, a small amount of real estate, and a small amount of equity, and will have emerged as a $100 trillion asset class. As a result, it will be 100x larger than it is now. Having said that, Bitcoin was not in direct competition with gold. It faced additional adversaries, including the global economy. The major currencies were the US dollar, the euro, and the Chinese yuan. Nonetheless, Bitcoin will continue to be unstoppable as a digital asset. When we arrive, it will account for between 5% and 7% of the global economy. The US dollar is likely to supplant 150 currencies. Perhaps there will be only 2 or 3 remaining. There may be a euro, a Chinese yuan, and a dollar. Everything else is almost certainly going to vanish. And at that point, Bitcoin will serve as the global monetary index. Even though BTC has made a compelling case against weak currencies such as the Turkish lira, the top 3 currencies' position remains a far-fetched fantasy. However, it is not impossible. However, as a result of the ongoing volatility and consolidation phase clock, BTC dropped to number 14 position. At the time of press, it was trailing the Swiss franc. Overall, despite its promising potential, BTC faces another impediment: regulation. Previously, former Democratic presidential candidate Hillary Clinton raised concerns about the biggest nail in BTC's coffin. Mastercard, cryptocurrencies and CBDCs are the future of money. Mastercard noted that adoption rates for emerging payment options such as cryptocurrencies have historically been higher in Asia. Consumers in Thailand and India are more accustomed to using cryptocurrencies than those in a highly developed market such as Australia. With nearly every central bank exploring or testing CBDC, Mastercard remains optimistic about its widespread adoption sooner rather than later. Whatever your position on cryptocurrencies, the fact remains that these digital assets are gradually establishing a foothold in the world of payments. Simply put, cash will not always reign supreme, and that is a belief shared by Mastercard, a global payments leader. Indeed, Mastercard has begun offering its customers access to cryptocurrency-linked debit, credit, and digital wallets, as well as loyalty rewards programs powered by cryptocurrency. Earlier this month, the multinational financial services corporation based in the United States partnered with 3 leading cryptocurrency service providers in Asia Pacific to launch the region's first crypto-funded Mastercard payment cards. The digital asset service providers, Hong Kong's Amber Group, Bitcub in Thailand, and CoinJar in Australia, have all begun accepting applications for crypto-linked Mastercard credit, debit, or prepaid cards in their respective markets within the region. They will then be able to instantly convert their cryptocurrencies to traditional fiat currency using these cards. In an interview with TechWire Asia, TWA, Rama Sridhar, Executive Vice President, Digital and Emerging Partnerships and New Payment Flows, Mastercard Asia Pacific, discussed the company's strategy in the digital asset space, focusing on cryptocurrencies and central bank digital currencies, CBDCs. Mastercard was the first to enter the Western market with cryptocurrency products and services. How has acceptance been so far, and how do you anticipate it will be in the Asia-Pacific markets? Globally, the Asian region has always had a higher rate of adoption of emerging payment options. There are, however, a few reasons why Asia is the world leader in this regard. To begin, according to Mastercard's New Payments Index, 94% of consumers in the Asia-Pacific region are considering using emerging payment methods this year. According to Mastercard, emerging payment methods include QR codes, digital wallets, buy now pay later, BNPL, transactions, cryptocurrencies, and biometric authentication. Having said that, the desire and enthusiasm for adopting a new payment method is extremely strong in this part of the world. The second factor is a sizable Asian population that operates completely cross-border, whether through online purchases or physical travel. As a result, expectations for a more global, seamless, and interoperable framework are higher in Asia than in the majority of developed Western economies. Right. Which country in the Asia-Pacific region does Mastercard consider to be the most cryptocurrency accepting? In comparison to a highly developed market like Australia, there are more consumers in Thailand and India who are very comfortable using cryptocurrencies. Even Vietnam and Indonesia are growing at double-digit rates at the moment, which bodes well for emerging payment methods. This in and of itself speaks volumes about Asia's developing economies, where the cash runway is extremely long. Not to mention the fact that, according to the United Nations, over 60% of the world's youth live in Asia-Pacific, totaling over 750 million young women and men aged 15 to 24 years. Now, as cryptocurrency matures over the next 3 to 4 years, many of these play people will be adults or will have begun their careers. In summary, Asia-Pacific is demographically primed for higher adoption rates, which is probably the most accurate assessment. As nearly 30% of the global value of crypto transactions occurs in Asia, the region is destined to be the global leader when it comes to the future of money. What was the tipping point at which Mastercard decided to incorporate cryptocurrencies into its payment network? Mastercard's position on cryptocurrencies is fairly straightforward: it is a matter of choice. We are not recommending that you begin using cryptocurrencies. However, we are here to enable customers, merchants, and businesses to move digital value in any way they choose, traditional or crypto. It should be your decision; after all, it is your money. Within the Mastercard network, we observed a significant increase in the number of people using cards to purchase crypto assets, particularly during Bitcoin's recent price surge. Additionally, we are seeing an increase in users using crypto cards to gain access to these assets and convert them to traditional currencies for spending. Above all, we have been and will continue to be extremely selective about the assets we support, guided by our digital currency principles, which prioritize consumer protection and compliance. Currently, we have partnerships with over 30 crypto card programs, and to be clear, not all of today's cryptocurrencies are supported on our network and will be in the future. However, stablecoins, which are backed by a basket of fiat currencies or a single fiat currency, are gaining significant acceptance. To top it off, stablecoins are more regulated and reliable than they have been in the recent past, and it is these very stable coins that we intend to integrate into our network. Tell us more about your thoughts on CBDC and the safe space that Mastercard provides for governments and private sector banks to work out how they work. We announced this proprietary testing platform for central banks last year. It essentially allows central banks to engage in a simulated environment where they can issue currency and distribute it among banks, financial institutions, and consumers in order to fathom how it would work in the real world. This will enable banks to identify and strategize the optimal regulatory environment in which to launch central bank digital currencies, CBDCs. To be honest, almost every central bank is investigating CBDC today, not because they want to issue it immediately, but because it is proving to be a necessary component of the ecosystem. With that in mind, developing the framework, the rules, and determining the most effective method is simply a matter of time. And for Mastercard, anything the central bank does on a principled basis will automatically be assumed. That is how our collaborations progress. Central banks in all developing economies, and particularly in Asia, are focusing their efforts on going cashless. As a result, many central bankers believe that CBDCs have the potential to significantly increase the number of people who use the digital financial system. Transparency is the other real issue on central banks' agendas. As a result, all governments and regulators are moving in this direction. Yes, this is not the only way to do it, but it is a good way to do it because it enables rapid access to currency for populations where physical cash circulation is restricted. Do you believe that a CBDC future will arrive sooner rather than later? CBDCs are the way forwards to facilitate digital transformation, financial and digital inclusion, and the elimination of cash. Will it occur within the next 2 or 5 years? Unfortunately, I cannot predict, but I believe that a great deal of framework and work is required. Without a doubt, there will be numerous debates between central banks about the virtues and demerits of how things should be managed. They will need to ensure that other established payment ecosystems coexist peacefully with CBDCs. Women seize space in the blockchain world as cryptocurrency queens. Maliha Abidi, an artist and women's rights activist, is an expert at utilizing digital technologies. When she discovered non-fungible tokens, NFTs, she immediately recognized them as a potential means of reaching a broader audience and increasing the visibility of women artists. Abidi, 25, was born in Pakistan and immigrated to the United States as a teenager. A few months ago, she created her first NFT, a type of asset that uses blockchain technology to track ownership of digital items such as images, videos, and collectibles. The activist from the United Kingdom is about to launch Women Rise, a campaign aimed at introducing 100,000 girls and women to cryptocurrency by the end of 2022. She is one of an increasing number of female artists, coders, entrepreneurs, and investors who embrace cryptocurrency and NFTs and advocate for other women to join the blockchain movement and help close the gender divide in this rapidly expanding space. When I first heard about blockchain, I was skeptical that it was a good fit for me. However, I was drawn to the art and recognized that artists can contribute to this and that it can be an inclusive space for women and people of color, she explained via video call. NFTs provide an opportunity for individuals who have not previously been able to invest in or sell their artwork in the traditional manner. Because cryptocurrency and NFTs are a means of achieving financial independence, it is critical for women and girls to be aware of them, she explained. While large institutional investors drove Bitcoin to new highs this year, adoption of cryptocurrencies has increased among younger investors and in developing countries, where anyone with a mobile phone can circumvent the formal banking system. According to platform broker Chooser, India has the most cryptocurrency owners in the world, with approximately 100 million, followed by the United States with approximately 27 million and Russia with approximately 17 million. Meanwhile, according to market tracker DappRadar, NFT sales increased nearly eightfold to nearly $11 billion (RM 45.7 billion) in the third quarter of 2021. However, according to a recent survey by CNBC and Acorn, more than two-thirds of U.S. cryptocurrency investors are men, and about 60% are white, a gender divide that is wider than in other financial investments like stocks, bonds, and mutual funds. While an Indian cryptocurrency exchange reported that women made up only 15% of its users, the crypto world appears to mirror the technology and finance worlds in terms of gender. There are women in the space, but it is heavily male-dominated, said Angela Walsh, a research associate at the University College London Centre for Blockchain Technologies. As cryptocurrency becomes more mainstream, it is critical to have a diverse set of perspectives involved in developing and operating the systems in order to make more informed decisions, she said. Included more. According to the United Nations Technology Agency, fewer than half of women worldwide use the Internet, compared to 55% of men, with the disparity widening in poorer countries, ITU. Similarly, according to the World Economic Forum's annual Gender Gap Report, women globally lag behind men when it comes to managing and accessing assets or financial services. With its decentralized structure, blockchain technology, which underpins cryptocurrency and NFTs, has been heralded as a path to a more just, transparent, and inclusive world. And cryptocurrencies are rapidly moving from the fringes of finance to the mainstream, as investors, businesses, and governments adopt them as an asset, a payment vehicle, and a hedge against uncertainty and hyperinflation. Meanwhile, NFTs have attracted celebrities, artists, and investors, with the sale of a digital collage for more than $69 million this year recording the highest-priced NFT sale to date, despite the fact that the number of NFT buyers remains relatively small. However, while cryptocurrency has attracted a diverse range of demographics, women account for less than a fifth of U.S. investors, according to a CNBC poll. Black women, who have historically been excluded from a variety of investment sectors, account for just 4% of cryptocurrency investors. This is why Lavinia Osborne, a British entrepreneur, founded Women in Blockchain Talks as a space for women. She also plans to launch an NFT marketplace for female artists, entrepreneurs, and collectors called Crypto Queens. Inequity is ingrained in society in such a systematic way that people bring their prejudices into every aspect of life, she explained, adding that she had encountered bias dripping with racism. This is why it is critical for diverse voices to be included in the blockchain conversation, otherwise, we will see a replication of the inequality that exists elsewhere, she said. Towards progress. Women NFT artists and collectors use Twitter handles such as @CryptoChicks, @NFTGirls, and @Boutique to promote their work and encourage one another. Numerous women and girls-related charities are also supported by many. Their work is gaining attention. Last month, the New York Stock Exchange displayed a physical version of an NFT from Boss Beauties, a collection of 10,000 NFT portraits of women. While Tavonia Evans, a data scientist based in the United States and known on Twitter as @CryptoDiva, created Dogecoin, a cryptocurrency designed to amplify the economic voice of the Black community. The crypto world is an extension of the technology industry, which has a massive diversity gap, she explained, adding that access to capital remains a significant barrier for women of color. That is why we founded Dogecoin, to focus on our own underserved community and do our part to close the divide, Evans explained. Evans is a member of the National Policy Network of Women of Color in Blockchain, which advocates for greater inclusion. These types of efforts will contribute significantly to closing the gender divide in blockchain, according to Walsh. There are a number of well-respected female leaders in the crypto space who wield significant influence within the industry and have credibility with policymakers, she explained. Their success should serve as an inspiration for other female crypto enthusiasts. While many prominent female cryptocurrency investors and artists are based in the West, more women are entering the space in countries such as India, where artists such as Sneha Chakraborty and 14-year-old Leah Mathikshara are rapidly gaining traction. When I first started, it took me a long time to find women, particularly women of color, and to get my questions answered, said Abidi, who was looking forwards to meeting many of her peers at the National Federation of Teachers annual conference in New York City. However, once you get past the white male gatekeepers, you'll discover a wonderful community of women. I believe cryptocurrency has the potential to make a significant impact on women's rights, she stated. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.